Good morning and welcome to the SUPERDRY PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses when it is appropriate to do so. Before we begin, I'd like to submit the following poll.
That's great, Ali. Thank you very much. And good morning, ladies and gentlemen, and welcome to the SUPERDRY pre-close trading update Q&A session. And I'm delighted to have with us today Sean Wills, CFO, and Julian Dunkerton, CEO. And I guess the idea for this morning is to give you guys the opportunity to submit questions. And obviously what I'll do is I'll spend the next 20-30 minutes or so reading through as many of those to give you as much of an update and clarity as we can. So, Sean, Julian, thank you very much indeed for your time this morning and setting aside the time. Perhaps if I may, Sean, if I could just start with you, maybe if you could just give us a quick recap of today's announcement, and then perhaps we can get into the Q&A.
Absolutely. Good morning, everyone, and great that we've got the chance to talk to you all this morning directly on the day of our Q4 trading statement, which I'm assuming most people have seen. It's a relatively simple trading statement, just recapping on the last quarter for us and a summary of where we've gone over the last 12 months as well. And I think that the reason it needs a little bit of explaining is I think it is probably the most difficult set of comparatives we've had all year in terms of what we're anniversarying last year and 2 years ago when COVID really started to hit in and skewed some of the numbers. And you'll see that in some of the headline numbers that we published. I think the good news is, in a tough market, this statement's been taken reasonably positively this morning by all the analysts we've spoken to, and the press coverage has been very factual and positive as well. We're really pleased actually with some of the performance we've been able to deliver, particularly the recovery that we've started to see in our stores. As I said, the numbers are crazy in some places. So our store revenue versus last year was up 200% in the last quarter because we had some closed stores last year, but importantly is up 23% on 2 years ago, which shows some return to normality in most of our territories. And certainly we've seen that in the UK, the Western European countries and the USA, and perhaps only lagging behind a bit now in Germany, which has been a bit more prudent with some of its controls and restrictions through the Omicron crisis, and consumers over there are still behaving a little conservatively on the back of that. The flip side of that is the e-commerce numbers are negative. There's a couple of reasons for that. One is that some of that trade has moved back into stores, so we've recaptured it through other channels. But also, as I think you're all probably aware, we've got a very important strategy to move this business back to trading full price. And in Q4 last year and 2 years ago, our Christmas January sale ran right the way through to mid-April online. So what we've done is move away from that sale and traded full price through most of that period. So we have compromised some of our top line sales as a result of that, but the margin growth we're seeing is significant. So in our statement, we referenced that across our retail business, we've seen about a 6 percentage point improvement in our gross margin, which is really material and a benefit we will continue to see going into Q1 this year, part of Q2 before we start to annualize that change in strategy last year. So that's really encouraging and is part of getting our business into a much more profitable shape going forwards. I think one of the areas I'm really pleased with is wholesale as well. So when I rejoined the business 12 months ago, I did think that wholesale may be our Achilles heel coming out of the pandemic, because whilst we have some very big strategic partners in there, there are a number of smaller businesses that operate franchises across Europe who would have been slightly more exposed to liquidity problems on the back of the pandemic. But actually, our debtor book is as healthy as it's ever been in this business. And as you can see from the numbers, we've done 3% growth on 1 year and 6% growth on 2 years in that part of the business. So really pleased with that. So I think we haven't said anything in the statement, but the implication is that we're going to come out broadly in line with targets this year, albeit slightly different shape. Bit lower on turnover, much stronger margins, and some very significant cost savings coming through from good behaviours in the business, but also the rent renegotiations we've been undertaking with a lot of our landlords, which are really paying dividends for us. So really pleased with where we are going into next year. Just explaining some caution, I think, in line with all our peers in other brands and retailers, with the uncertainty about consumer inflation that we face going forwards. So I think that summarises our statement. As I said, reasonably short and sweet. I'll allow Julian to talk about some of the more intangible benefits we're seeing in the business now.
Yeah, so I'll just talk about product, social, sustainability, rent, and the e-tail experience very quickly. So product, you all know that is obviously my absolute strength. So that has been progressively getting better since the day I got back in the business. I am more involved than I've ever been, and actually we are getting absolute clarity in the product journey. The sort of dare I say, the clarity of thought behind each collection is making more and more sense. So we can really feel the progress there, and you can see it in the dresses, the skirts, shirts in menswear doing incredibly well this season. And as we tick off each category and we really focus on each category, that category then goes forward. So we're working our way through the entire product range. Social, so you've obviously been aware that we've been increasing our influencers. We're now up to 2,349. We've had a real UK bias on that, but we're now building into Europe, which is very exciting. Now, you know, part of social and the e-com journey, we are all aware that the e-com journey has not been good enough. We've not had a decent platform to really move forward with. Microservices is being tested as we speak. We are now testing Ireland. We've already tested Hong Kong, so we are progressively working through our sites. We would expect the UK to come online in a few weeks. I can't tell you how significant that is, because, you know, we have been a backward journey, if you like. Anybody who's gone through to the basket sort of part of the journey will realize how behind the curve we've been. So this really gives us an opportunity to catch up and then move to the front of the pack again. So very important. So please keep watching over the next few weeks, and hopefully you will start to sense an easier journey, better payment methods, just the whole experience from checkout, listings, details, product details, and obviously the international experience, all improving. Then we talk about sustainability as one of our key pillars. Sustainability is absolutely at the core of this business now. We really have in our sights to be best in class in the world as a listed company. We are making such huge progress. You will start to see a social campaign commence on the 6th of June, or feel a social campaign. Those of you who have been into Oxford Street will have already seen the messaging starting to come right to the sort of fore of the conversation with the consumer. We all know from an ESG point of view how important this is going to be from an investor point of view. So, you know, we really want to be top of the class in this area, both from a consumer point of view and an investor point of view. We are making huge progress, so keep monitoring that progress. You will hear more and more about it. And then probably last of all, just talking about the property portfolio and the rent situation. We're making huge progress with all our landlords, really working through the portfolio and bringing us to a sort of a good forward-looking state of affairs. So very exciting. You know, the underlying rent savings in the last year have been about 50%. So as we work through the portfolio, that becomes very important. So all in all, you know, in every area, we are pushing forward. Now, obviously, through COVID, that's been a difficult journey. Coming out of COVID, we really feel we're going to make some real progress that you can palpably feel. So yeah, I mean, that's essentially it. We are feeling positive here, and you know, bringing ourselves fit for the future.
That's brilliant. Thank you very much indeed, Julian. Just a quick thing, because Paul S has just fired in a question around what you were just saying, and just asked, what is microservices, please?
Oh, I'm sorry. So that's the platform, the ecom platform.
Yeah. So when you re-platform your website, You can either buy a big out-of-the-box platform a la Amazon, or you can buy lots of services that you bolt together. So, you know, the postcode lookup is one service, and your graphics engine might be a different service. And we've chosen that route because it's a bit more agile, and it allows you to develop each of those different components in parallel rather than having to sort of do them in sequence. So it's a slightly more agile approach to e-commerce platform.
So it will allow us to improve in a way that we just couldn't do on the previous platform.
Of today's event, and maybe I could start off with those. How do you judge the attractiveness of your stores to entice the customers to browse?
How do I judge it? So I've been retailing all my life, so I find it, you know, relatively easy. I have a fantastic team, led by Craig, who really is doing an amazing job. I'm very fortunate that a lot of the team have been with this company for a long time, so they understand what good looks like. And yeah, those of you who've been in Oxford Street and seen how we've divided the store up by style choice will realise how much clearer the journey is now versus, you know, 5, whatever, however many years ago. So those of you who went into Regent Street and now go into Oxford Street will really feel that difference, and the consumer journey is palpably getting better. I don't know that you had a nice photograph, I think, of the front of Oxford Street there in one of your photos, and it, you know, you can see it's very much a nod to current trends in terms of vintage wood. Restaurants have been ahead of the curve in terms of shop fits, so we really brought in a lot of the skills that restaurants have been ahead of us with, and brought it into our retail environment. So yeah, Oxford Street very much the blueprint of the future.
I think it's worth also adding that we're running some trials in other stores of that shop fit. So we're going back and retrofitting some of our stores, and they're being trialed and measured very carefully. So there's quite a lot of science goes into making sure we can't tell whether this light bulb makes a difference to that light bulb, but the overall concept, whether it resonates with the customer. And I have to say, I've been in this game a long time. The results we're seeing from those trials are better than any I've seen in any other business I've worked in. So we're quite excited about the potential for that as we raise more liquidity to be able to invest in those stores.
That's great, thank you. I think we did play a video of the new store. I think that's available for investors to watch. They can get that on your investor section on your website. There was a question. I know you're growing the business substantially, but there was a question. Can you please explain your thoughts around a dividend policy? Maybe I could just throw that at you.
So current thinking is that we really want to build up our cash reserves in the business. We've still got a lot of opportunities to invest in the business in terms of growth. So I think to be talking about a dividend at this point would be the wrong thing to do. Those who know me of old will know that I like to build up a cash pile. So, you know, the dividends are off the table at the moment while we build up our resilience and our growth opportunities.
Yeah, that's great. Thank you. Let's turn to a question, if I may, from Matthew, who asks, where do you feel you are in the turnaround of the business, and what do you see as the biggest opportunity for you moving forward? A bit of a broad question, but
okay, so where are we? I mean, you know, patently COVID put a bit of a break on the whole journey. I would say we're at the starting point, really. You're going to, you know, we've been doing a lot of work in the background to prepare ourselves for this phase. So if you look at the physical store journey, it's getting better. Microservices just about to land, how important that is for the e-com journey. You're just about to hear about our sustainability journey. Our ability to communicate through social is really starting now, as we've proven a concept in the UK and now we're rolling it out across the world. So, you know, you've got to say this is, I mean, possibly the inflection point that we've been waiting for to now return to growth and proper growth. Yeah, and you'll see that through a pride in product where we are not afraid to call out the word Superdry on the outside of our clothes again, because actually, that was key to our whole success. And I think there was a slight sort of lack of confidence, I would say, in the business. That is now back. When you're designing amazing products and you're not on permanent sale and you're building the brand again, then people want to wear it again. So this is very much the inflection point for me from now.
I guess the second part of that question, I guess I don't know whether that's around the biggest opportunity and maybe in terms of geographies or areas of the business where you feel you see.
I mean, we've got so much opportunity everywhere. I mean, patently the growth is going to come, a consolidation of retail, if you like, or we're not wildly opening like hundreds of stores anymore. We are really focused on that e-com journey. We are really focused on wholesale. And delivering a replenishment model for department stores, which will be quite significant, we believe, in terms of our growth strategy. Patently, if you look at the geographies of the world, America sits there as a massive opportunity. Germany, we've still got a huge amount of growth. China sits there as a waiting opportunity. So there's lots to go at. When you extrapolate the UK numbers and look at the world, this is going to be a very big business.
Can I just apologise to everybody? Our intruder alarm has just gone off in the building, which you can hear in the background.
I wasn't sure whether I'd won something, to be honest with you. For that question, they get a SUPERDRY t-shirt or something. But anyway.
I can track somebody down to come and turn off.
Nick asks, from a design perspective, do you feel the customer needs are changing, and how do you ensure that the brand remains on point?
Yeah, so what's really interesting is the style choices that have actually allowed us to communicate to different areas of the demographic at different points. So we've used our short order process to deliver to a teen consumer. Obviously, the graphics or the external branding communicates to one consumer, whereas the subtle branding and the sort of much lower tone branding sits in our studios range. So we're actually able to communicate to a vast number of people while still under the SUPERDRY umbrella, which is really where I wanted to be. I didn't want to be reliant and hidebound by one consumer. We've now got a very broad range that we can target. So that becomes much safer and much more exciting because the opportunity is obviously much bigger.
That's great. Thanks, Julian. Turning to Paul. Paul, thank you very much indeed for your question. If you're not discounting online or in shops, where does the slow-moving stock go?
Well, you'll be delighted to see that we have been very efficient at reducing our stock holding. So it's now less than 13 million units. When I came in, I think there were 19 to 20 million units, somewhere in that region. So we've done a very good job of reducing our stock holding. We will continue to do so to the tune of probably just over another million this year. And then that will be normalized, and then we will grow from that point. But it will be growth that allows a full price stance. What this company did was build up stocks that made it difficult to maintain a full price stance. We are now right sizing ourselves to be able to be full price permanently.
Just making sure that is a test alarm going off in the background. Well, listen, if I see any flames or anything, I'll give you a
no, it's a fault line yesterday.
Right, next question. How are you dealing with input cost pressures, and are you seeing any change in consumer behavior due to just really that general inflationary pressure?
So it's too early or too difficult to really say there's been any consumer change as yet. But obviously there are inflationary pressures, not least the workforce and some sort of cotton costs and so on. Look, prices, there will be some price inflation going for the next 12 months. We've already put our prices up slightly in the autumn and a bit more next spring. Very, very calculated way, working through our range, making sure it makes sense. I mean, we've got to put it into context. Some price points haven't changed for about 20 years. So we are and remain the best value brand out there. So for the quality, for the price point, we're very much in the right space. So there is inflationary pressure, but we are dealing with it.
Great, thanks very much indeed. As a major shareholder, I mean, this is a kind of a good question, I think. Maybe I should have saved it to last, but anyway, I've ruined it. As a major shareholder, what are your thoughts around the current share price?
No, I think we're being buffeted around by external events, to be honest. I feel we have done everything that we can do to put ourselves in the right direction, and I think when you look at the pillars of this business and how we're going to build it, you can see that's true. I'm a long-term investor, so I don't worry too much about the short-term kind of external factors buffeting us around. I think that's sector-wide. I'm a long-term person. I'm committed to this company. I love this work. I love this company. I love working with the people I'm working with. So we just got to accept that as part of life, I suppose.
Great, thank you. Next question: the store versus the e-commerce revenue split. Can you explain how the trends, what the trends you are seeing, and how do you anticipate e-commerce returning?
So obviously, shutdown, the huge move into the, the only option was the online space. So you saw that huge spike, and it's interesting what products were selling. A lot of sweatshirts versus then versus now. Spike in women's wear as a result of that too. As we normalise, I mean, because we're implementing microservices, we do expect, more growth, obviously online, but macro level. Do you want to say anything?
Yeah, I mean, as I say, it's very hard to unpick at the moment because of our change of strategy from full price to reduced. But the reality is, as I say, we're really comfortable with the rebound in stores. And the great news about that is stores have quite a high fixed cost. So every pound we recover in a store has quite a big impact on our bottom line. So that's quite pleasing for us going forward. And we're assuming a steady recovery through the rest of this year to sort of around 10% below pre-pandemic levels. We don't think we're going to get back to pre-pandemic levels. There's been a shift, and that is slightly different country by country. But I think, as Julian says, the opportunity from the replatforming of e-commerce to just implement things that a lot of other businesses have already done and proven that it drives conversion and therefore sales. It's not bleeding edge stuff we're talking about here. It's sort of getting ourselves up to what's going on in the market now. That's where the real opportunity sits for us. It's self-help strategies. We're not reliant on the market for that.
Okie dokie.
Better put than I did.
Yeah. And you've got the alarm going off in the background. It's amazing when you turn the alarm off. Turning to Darren, Singer's note suggests negative cash flow yield for the next 2 years. Can you discuss?
I can discuss. I think they're wrong. It's a simple answer to that. I think perhaps we need to have a look at that model and just understand what's causing that, because the reality is, there is clearly risk in this year of where the consumer market's going to go, and we have to be agile and adapt to that. We've done a really good job of that over the last 24 months, and through the pandemic, the business has become a lot more, as I say, agile at reacting to these situations. We are limiting our CapEx budget to the essential investments over the next 24 months. We've made some quite significant cost reductions. And the most important of those is the rent renegotiations that Julian's already touched on, where we're bringing our rent bills down by 50%. And it could be that the analysts don't quite believe us yet that we're going to be able to deliver that all the way through our sort of lease cycle. But I think we've done about 70 of those stores over the last 3 years, and we're going to do as many again this year alone. And as I say, 50% reductions is not insignificant on your rent bill. Put that with the working capital improvements we're seeing, and if turnover goes anywhere near plan, then that just won't be the outcome.
Thank you very much indeed, Sean. How do you scale the international operations in the countries you operate
Well, we have different models in every territory, to be honest. So France is run by agents. Australia is by a distributor or a licensee. India is a licensee. And Germany's direct. So it's different in every territory. I mean, there are lots of models that make sense. Usually it's about geography, how far away they are to what model you adopt.
Great. And then maybe if we have time, maybe I can just finish up with this one, if I may. How important is India to the business, and what's the relationship with Reliance Brands?
So I've just come back from there, actually. I was there 2 weeks ago. I came back a little larger, eating lots of curries. Look, we have a fantastic relationship with Reliance. They were here 3 days ago. We're getting closer. They're expanding. They are looking to double in size, I think, in about over a 3-year period. So they are very important and becoming more important. What's great to see is that lovely commitment to the brand. Brilliant company. I mean, brilliant company.
Great. Well, look, Sean, Julian, thank you very, very much indeed again for your time this morning. Look, the alarms are off. You're safe. Everything's good. So perhaps all that's left for me to do is say thank you, and obviously thank you to all those investors that submitted questions this morning. I know investor feedback's important to you guys, and I will shortly redirect investors to give you their thoughts and expectations. So before doing so, I wondered if I may, Julian, just ask you for a few closing comments.
Well, just that, we feel fantastically confident about the future. If you create great product at the right price and you sell it in an environment that works, you're going to win in this game. And I think our position is actually consolidating in the market in terms of where we sit and who are our competitors. There are no new competitors in our field, it would seem. So we feel confident. We put all the pillars in place. We, like I say, I'll go back to what they are. The product's getting better. The ability to communicate to customers is getting better. The e-com platform is about to improve. Our sustainability credentials are going to be the best in the world, and they're clearly on the journey to becoming that. Our rent reductions will put us in a place that makes the economics of physical retail make sense. So, we feel pretty good about life.
That's great. Well, thank you very much indeed. And
Could I just add one thing?
There you go.
No, just about, I think
it's nudged you, Julian.
It's great that I love the fact that we've got this platform, because actually, looking at our shareholder register, this audience is a really significant part of our shareholding base, and actually a really important part. So it's great that we've got this opportunity, which I don't think was here last time I worked for SUPERDRY, to be able to talk directly to you on these important days for us. So thanks for the chance to do that, really.
You're more than welcome. Thank you very much once again. Maybe I'll just hand back to Alessandro just to wrap up.
Thank you.
Julian, Sean, thank you very much for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of SUPERDRY PLC, we'd like to thank you for attending today's presentation, and good morning to you all.